I'd like to give you some slides, set the framework for what you talk about today in Germany. And wherever I think you and we are going, I think you have to start with the cliches and stereotypes, because obviously 49% of all these cliches and stereotypes are true. And I think starting with a let's say interesting economic statement, I think these ladies at the top left side, the Oktoberfest's running starting on Saturday for the next 2 weeks before Expo Real, which means the GDP growth due to beer drinking and knuckle eating has the level of 0.2% just by drinking beer between the northern part of Germany and for sure Bavarian. But the Germans like their kind of house, especially when they bring the thermal, what is the translation? The thermal solution in that. Mr. Schweinsteiger, meanwhile, he's not finally at Germany playing here for Manchester. But again, coming with all these things before we come more to the boring scene, I think the stereotype Germany, when you read Financial Times and all these statements, it's called solid rock, stability, and the Merkel effect, and the Germans do it better. I like this for sure on one hand, but on the other hand, the Germans, the German Angst. The Germans think twice, and the Germans don't make any investments in stocks. They like their insurance, they like their house, and then it's over. And this is again totally different risk-averse profile compared to the rest of the world. But on the other hand, I think you've heard about the Volkswagen case yesterday, so I'm happy that that's just Mercedes here and Porsche. But anyhow, I think coming again to these slides were showing the German economy framework on that. When I touched the point of the German Angst, the main German Angst of a lot of Germans are in these days the refugee case. So many refugees came to Germany, which means the unemployment rate will rocket up. For sure, it's nonsense by the end of the day, but this is again where maybe a nation, but also the decision makers in Germany, positively speaking, we can solve the problem, but on the other hand, it's a foggy situation. I think we all know here in the room by maybe end of next year, the European Union, where Germany for sure is one of the, I would say, main party in the decision-making process, will not the same EU 28 as we see it this year. So things will change, my personal belief, dramatically on that. On the other hand, looking at the unemployment rate in Germany, it's something around 5.9 yesterday data. So it's a dreamy situation. It's a fantastic environment for making investments on that. The only people you should never ask what's on the economy going on are the Germans. So they are still 51% too pessimistic. Again, this is a situation, please bear this in mind when we came later on to the discussion. All the sentiments are coming more now in a more stable situation. To link to the Chinese effect, the Ukraine effect we saw 6-7 weeks ago. The oil price for sure will have some skid marks in the GDP expectation for the next 12 months on that. But in total, I think it's a pretty shining situation Germany is faced on, especially for the next 2 years. Mainly also driven by the comparison when you compare Germany and the other big giant within continental Europe, France. And France is, from economic approach, don't get me wrong, it's a disaster in these days. And there are a lot of clouds in the sky. Again, set the theme, which means when we talk in Germany with institutional investors, we talk on the figures, then it's the commercial transaction volume. It's around 25 billion in total first 2 quarters this year. Again, it's rising up compared to last year figures. So it's in average, it's nearly the half that the UK normally represents. Interesting figures when you look at the prime office yield for something which was 10 years ago incredible or unbelievable from a German perspective, that ever in their lifetime, in our lifetime, something comes under 5%. So the typical German calculation and the promise from an insurance company, maybe they would 5+. This is for sure not, let's say, achievable in these days. And when we're just covering the top 5, which means Frankfurt, Hamburg, Berlin, Munich, and Cologne, then we come from our forecast, we come to 4.2 by end of this year, just to give you an indication. Again, there's a wide spectrum for sure. On the prime retail, it's 3 something, which is again coming down from 4.25 prime high street 2 years ago to 3.8. Interesting for you, and I think this is the main difference to maybe the rest of Europe. Germany don't have any, let's say, dominant center. well, as a Frankfurt guy, I have to say, well, Frankfurt is the top of the pop. From a Berlin perspective, well, it's a capital, let's say this. If I would speak Bavarian, I would say there was nothing about it, just Munich on that. And so we're going on. So the main challenge you will ever have is decide where you start your business. On one hand. On the other hand, it's a fantastic argument for diversification, whatever this means in detail. Plus all these around 100 so-called B and C locations in Germany, or secondary and tertiary locations on that. So it's a wide cloud of opportunities, let's say this. And I think this is one of the main reasons why all these headlines, Germany is so stable and all these things coming up, it's based on the geographical spectrum and not on one dominant center like, let's say, city compared to, or London compared to the rest of UK, or Paris, Ile-de-France compared to France. This is, again, a totally different situation on that. Going to the things going on, and to be honest, I think the cross-border activities Germany is facing on, it's I wouldn't say it's nearly double, but you can see it, the first 2 quarters, it was around nearly 11 billion euros coming from foreign investors, more than ever, into Germany. And this is again driven because of a lot of reasons, but one of the main reasons is, and I'm looking all these Chinese and maybe Schröders and all these acquisition profiles, you will find the buzzword called diversification, risk reduction, diversification, risk reduction. So it's the same argument that Germans try to use when they come to a city, London or Edinburgh or whatever. And again, look on the evolution of the prime office net yields. I think last week, Ms. Yellen don't make a reasonable decision from an analytical standpoint, just poor analyst. From the big picture on our industry, for sure, the positive sentiment will go on. I have to say this quite clear because on one hand, there is so much money around Europe, around this planet, and for Germany focused on. On the other hand, this is one of the main reasons why we are facing so low yields. Maybe this is a new environment. Let's have a discussion later on. But on the other hand, I think this will cause some problems when the first interest rate increase will come up to them. Talking on Ms. Yellen, not on Mr. Draghi. So as long as the QE activity is going on, and I believe in Mr. Draghi by August 2016, so I think for our industry, making your and our business, I think the sun is really shining, dramatically positive shining. And just some figures on Berlin, Düsseldorf, Frankfurt, Hamburg, and Munich, so the big ones, top 5. Some use it instead of Düsseldorf, Cologne, so don't get nervous. But you can see it, what's going on the first half year. It's a new record or new things going on. From the ration, my presentation is without any residential. We touched this point later on, and you will see the map. I bring it with you. Again, happy to answer your question. But when we talk on investment market, then we talk on a huge dominance by office, followed by retail, and then the rest. Let's say this. For sure, things are coming up like hotels or Union make activity in Motel One chain and all these things going on. But from the big cake, it's office and retail. Interesting, and touched the point called diversification, going from Frankfurt to Freiburg, which is in the southern part of Germany, which is a synonym for A location and B, or as we say, B location first and secondary locations on that. I think the main decision process going on in these weeks within all the investment committees is, should we go to Frankfurt, from Frankfurt, or from London to Regensburg, all these B things on that. By the end of the day, I think most of people in the room, myself too, we are lazy bones. So when you have 500 million, so let's say 120 million US or pound sterling, you go to Frankfurt, then you can grab half a tower. When you go to Freiburg, you have to make 5 acquisitions by investing your money in that. And so this is a reason why, on one hand, from the reasonable standpoint, the yield hunting makes sense to go to Freiburg, Regensburg, Karlsruhe, and all these secondary locations on one hand. On the other hand, the liquidity and the size and volume of the, let's say, properties are for sure limited, say that. And again, looking on the difference of the basis point for us, and especially for you and me, it's for sure interesting what's going on. What's going on here? Oops, here in this year. So before all the risk managers came to our industry this year. So you see the spread, and you see the spread now here. And I think this is the main argument and the main, let's say, rational decision-making process going to secondary locations in these days in Germany. What does this mean by the end of the day? And this is, again, Germany is different. What you can see here, the blue dots are the big top 5 or 7 defined by size. That's 5 million square meters in total. Again, can't compare to city or London in total. The red ones, you see the so-called secondary locations. It's the yield risk structure. And honestly speaking, most of the investments we saw the last 12 months were, of course, in these range. So these ones, because they show by size a kind of special of, let's say, liquidity in the market, and this sounds rational. On the other hand, if you are a yield hunter, and a lot of people have to become a yield hunter in the next 2 years, Yellen and Draghi, and maybe you think about going to Weimar, Gera, and all these interesting spots, which are in a stable environment, don't get me wrong, here at this part. But again, it's up to you. But it shows you the wide spectrum, what's going on. We define it as a potential investment corridor. So for our funds and our investors, we advise and will give us their money. For us, the focus of these days are in this corridor going on with that. By the way, if you see this, it's Magdeburg and Erfurt. I know most of the Germans, especially at the age of 50 plus, they have huge problem make investments in the former eastern part of Germany because they burned money 15 years ago when they started their career. So this will never, they never forgot this. And this is structural nonsense. The case of Erfurt, let's say this, it shows you an attractive yield on one hand. On the other hand, for sure, it's a smaller market, but the sentiment from a German perspective is absolutely poor. And this is not really rational, what's going on. It's a stereotype, never ever burning money in eastern part of Germany. Sum up, I think these are the cities that say this. It's linked to the office market, which we recommend to our investors, mainly pension funds and church-linked associations. These are also super core investors on that. Freiburg, Darmstadt, Aachen, Heilbronn. Most of them are, I wouldn't say close, but nearby one of the A locations. Let's take the case of Darmstadt, which is 10 kilometers southern part from Frankfurt on that. So these standalone secondary locations are more in the focus from a research perspective, but if I count the deals, it's really limited environment in these days. And again, last slide. Apologize for the source here, the red and the yellow dot. This is the general recommendation, generalized. Again, a lot of fog in here, but what we recommend and what we don't recommend in these days. To be honest, after 20 years, it's 25 years after German unification, but after 20 years, 20 years, you will see a huge offer by formerly known East German investments, the first stage of the German unification. You will see these things coming up, 20 years old. On one hand, positively speaking, with a huge leverage on increasing rents coming from, let's say, €4 something to €7. Interesting, by just seeing the cash level. On the other hand, the industry in Germany, meanwhile, changed so dramatically, especially all the sustainability and environmental things, protection. This bring especially the elder existing property in a huge depreciation effect, beside all these positive sentiments, by the way. But again, finalize that, I think just to like to show you the wide spectrum. Well, for sure, everybody wants a fully let properties on one hand, but it's shifting more to the so-called risk curve, whatever this means. I see the last 2 quarters that some investors would say jump from core into development, understanding and explaining that this is the new core on that, again using the German phrase, and not riding the circle on value add and maybe opportunistic. So we see a lot of, well, some, let's say this, big ones, who are starting again the project development, or the development as we say internationally. And this is again where I see the market for the next 2 years. I expect more and more cranes than ever on one hand, due to the lack of new supply the last 6 years. And this is again where I quote the German Angst. After 2009 and 10, there were absolutely no discussion going on and starting new constructions and developments. That was the great nothing. What you see in the cranes walking through Berlin or whatever, these are residential activities, but not from the commercial side. It's absolutely limited what's going on there, and this for sure will drive the market in maybe a new, let's say, environment. Okay, thank you very much indeed.